Ladies and gentlemen, good day and welcome to Q4 FY'24 Result Conference Call of Men Industries India Limited, hosted by Emkay Global Financial Services. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on a touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Amit Lahoti from Emkay Global Financial Services. Thank you, and over to you, sir.
Thanks, Muskan. Good evening, everyone. I'm glad to welcome the management and thank them for this opportunity. We have with us today Dr. Ramesh Chandra Mansikhani, Chairman, Mr. Nikhil Mansikhani, Managing Director, Mr. Sanjay Agarwal, CFO, Mr. Rahul Rawat, Company Secretary, and Mr. Kamal Kant Sahu, Strategy Head. I shall now hand over the call to the management for opening remarks. Over to you, Mr. Mansikhani.
Hello, sir. Your voice is not audible.
Yeah, can you hear me now?
Yeah.
Hello?
Yes, sir. Go ahead, please.
Yeah, hi. Good evening and afternoon to all the shareholders and the investors. So, for the full year of 2024, the company has reported a consolidated revenue of 3,142 crores versus 2,231 crores in FY'23, which is a 40% year-on-year increase, with an EBITDA of 292 crores versus 176.8 crores in FY'23, which is around 65% increase. The PAT level stood at 105 crores versus 68 crores, which is again a 54% year-on-year increase. The reported PBT and PAT are quite strong on a year-over-year basis. Still, we are expecting further strong and more sustainable PBT and PAT going forward. During FY'24, we witnessed a higher depreciation and interest costs that were on account of ERW mill capex, whose production was delayed due to certification and approval process. The current unexecuted order book as on today stands at around 2,100 crores, which is to be executed in the next 6 to 8 months. And the company has sound financial health with net cash position of 174 crores. As of now, the company recently announced and settled benchmark in the industry for successful testing of hydrogen transportation pipe by one of the prestigious international testing agencies. Going forward, we are confident enough to take the first mover advantage, and which will enhance our order book significantly, as all the new lines will be laid down for hydrogen. So also we are happy to announce a strong and sustainable quarter and year. Our promising performance in the last financial year and securing new order wins are emphasizing a commitment towards excellence. On operation front, recently we have announced additional orders worth 505 crores to be concluded in the next 6 months. From the beginning of the year 24, we have secured an order approximately 1,500 crores. We envisage a strong order book for the coming quarters and are hopeful for strong performance going forward. Having said that, our ERW mill has successfully received the API certificate. These pipes are usually required for oil and gas industry and which has a higher margin. Although we have started our ERW mill in the late financial year, and we are quite hopeful that the current financial year will be a sustainable year for our ERW segment. Your company is aggressively heading towards its expansion plans for both SAW and stainless steel tubes, which are very much on track, and we believe we can fulfill our commitment towards all our stakeholders. Thank you.
Hello.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Pinky Mahato from MK Global Financial Services. Please go ahead.
Hi all, good afternoon. Thanks for the opportunity. So my first question is, how much capex you have spent on Jammu extension so far? And there's also a follow-up question. Could you break down capex to be spent in financial year 25 and 26?
Yeah, hi. So the capex which is already been done is close to around 130 to 140 crores, which is already been done. And going forward in 25 and 26, it will be approximately total of capex would be around 800 crores further.
Okay, and the second question that I have is, could you provide an update on Marino in terms of timing of transaction closure and expected amount?
Yes, so we have finalized the developer and all the documentations are also now in place. And we should be announcing it very soon. So it is in the final leg with the lawyers, and I think probably this quarter, hopefully, fingers crossed, we should be announcing it.
Great, thank you.
Thank you. The next question is from the line of Vikas Singh from Phillip Capital. Please go ahead.
Good afternoon, sir, and thank you for the opportunity. Am I audible?
Yes, thank you.
Yes, you're audible.
Yeah, sir, my first question pertains to our revenue potential. Given that we have ended the year with almost 2,100 order book and our past history, can we safely assume that the next year revenue could be in the line of 3,500 to 4,000 crore levels?
Yes, that would be more or less accurate.
Understood, sir. So my second question pertains to our margins. Given the fact that we are still export heavy, our EBITDA margins somewhat looks lower at 7 to 8% range. So just wanted to understand effectively because the notion is that the export margins are usually on a higher side versus domestic. So if you could give us some explanation there, it would be really helpful.
So this year the EBITDA margin is around 10%. And so going forward, we would be between the same levels. The 10% is mixture of, also when we take a lot of water orders, the EBITDA margins are lower in that. So it's the average EBITDA which comes at the end of the year. So, but we are very confident that to push those EBITDA margins up once our expansion plans, which are already going in place, once that is completed, the EBITDA portion would be pushed up.
So what kind of EBITDA margins we are looking, let's say, 1 year down the next year or FY'26?
So 24-25 would be around the similar range because the projects would complete only and start by 25-26. 25-26 onwards, it would be upwards of 13% and so. And we are targeting around the next 3 years to be at around 15%.
Understood.
Fine EBITDA for Concall level.
So just one question on this quarterly. Essentially, if we see that the numbers have been slightly lower side, EBITDA as well as the revenues. So just wanted to understand, usually 4Q has a notion that is the strongest quarter. So what has happened, and if you give us the volume details as well, how much of tonnage we have executed in 4Q?
No, it's not related to the Q4 is always the strongest quarter. It is where we have which orders are ongoing, and a lot of our export orders were completed in Q2 and Q3, and majority of execution which was happening in Q4 was mostly water. So that's why the EBITDA is slightly weaker compared to the other 2 quarters.
Understood. So, and the volume for 4Q or for full year, whatever you are comfortable with, given?
So the volume approximately we are at around 3.5 lakh tons.
Understood. So just one last question. In our outstanding 2,100 crore order book, what is the oil and gas and water mix as well as the export versus domestic?
So oil and gas, water currently is, I think, a mix of 80-20, and export is approximately 80-20 as well.
Understood, sir. Understood. Sir, just one. For 350,000 tons, given 9 months, we have done 2 lakh. Basically, the last quarter numbers comes out somewhere around 1,40,000 plus. So looks, given that higher volume but lesser EBITDA, looks on a slightly distorted side. So am I calculating correctly or there's some error here?
No, there might be some error, but nonetheless, this quarter was, if you see tonnage, obviously if you do more tonnage also, but you're doing more water, your EBITDA is going to be lower, right? So like I said, this quarter was, did a lot of water work as well, and that's why the EBITDAs were low. Is this comparatively?
Understood. That's all from my side. All the best for future. Thank you.
Thank you. The next question is from the line of Dhavan Shah from Alpha Accurate Advisors. Please go ahead.
Yeah, thanks for the opportunity, sir. So my question is also on the mix of execution during this quarter. So I think last quarter also you mentioned that the execution was more towards the water side, and this quarter also we are saying the execution is more towards water, right? Even though 80% of the order book is from the oil and gas.
Last quarter was not water mainly. Last quarter was majorly exports.
Okay. So in exports, the margins are better or lower than the domestic?
Margins are better. Q3 margins, and obviously if you see it was better. Q4 is slightly weaker is because a lot of the domestic water book was going on that time, and that's why. And this keeps changing, you know. Our business is not a quarterly based business. Ours is a consolidated yearly business. Every quarter has some businesses which we take quickly, then the oil and gas businesses goes on for 6 to 12 months. So it's not everything every time in our hand to estimate what is the oil and gas ratio, but we tend to take less water. But last year, since we want to push up our turnover, we want to push up everything, we are going more aggressive in water also. That's why.
And the EBITDA per ton wise, can you share what is the EBITDA per ton mix between domestic, export, oil and gas, and the water business? Because you know the competitor which has reported the numbers recently, I think they are showing a good EBITDA per ton, but it is not reflecting in our numbers. So if you can share thoughts on that.
You know, some of our competitors might have got an order which may be, if you get, sometimes you get a EBITDA which is $200 to $50 also, and sometimes you get EBITDA of $150 also, so per ton. And then if you do water also, then you get probably $60 also in India. So that's why it's difficult to give. But oil and gas tentatively between $150 to $250 depends on how many competitors, which region, how tough is the project. And water is between approximately, if I say in rupees, between 5 to 7 rupees.
Okay, 5,000 to 7,000 rupees at ton you are saying. Okay. So Motamoti, I think you are saying that on an average we should do roughly 9 to 10,000 rupee EBITDA per ton on a blended basis for full year.
Correct, absolutely.
And how much tonnage are we expecting in the next year? This year we ended up with 3.5 lakh tons.
We are looking at around a 25% increase in the tonnage as well. The difference is that this year the tonnage was, even though it is high, and next year also the tonnage will be higher probably, but the prices of steel came down steeply in the middle. So the direct proportion also varies, because 6 months if the price is down and 6 months price is up, then again it varies.
Okay. And in the 2,100 crore of order book, is there any orders from ERW?
Now, yes. We've got around 150 odd crores worth of orders of ERW.
Okay. And in the press release, I think we mentioned that this 2,100 crore order book would be executed in the next 6 months. So maybe by October end, we are targeting this 2,100 crore kind of the revenue?
So between October to December, 6 to 8 months is the generic time. Sometimes your delivery date is longer as per the contract of but your FG gets ready, and you don't want to block the mill because if you have some other orders to take. But 6 to 8 months is the more accurate So probably by November, December, yes.
And by when can we expect, the Jammu and maybe, I think we were planning to expand in Saudi also, right?
Yes.
So when can we expect the capex to be commissioned?
So we are announcing Saudi, hopefully, like I said, next time. And it's already under progress, but it should be, the tentative timeline for operation is March 25. And that is, SS is March 25 for the first phase, and the second phase, because the mother pipe and pilgering is there, that would be probably between second and third quarter of 25.
This for Jammu you are saying? Second and third phase?
Sorry?
Second and third phase, first phase, March 25 is for Jammu you are saying?
For Jammu, yes, as well as for Saudi. And for Jammu, second and third phase in the sense of there is mother pipe and pilgering and everything. So that would take another 3 months to 6 months to, stabilize.
And capacity-wise, can you share how much capacity will come on board because of Jammu and Saudi by March 25, and maybe by 2Q, 3Q 25, what kind of capacity increment numbers can come?
So approximately capacity in Saudi would be around 400 to 500,000 tons. And in Jammu would be around 20 to 25,000 tons of stainless steel.
Okay. So by March 25, how much will come on board?
So March 25 will be the first, is the operation. So then the first year of operations will be probably 30% or 20% of production, for 20 to 30% for SS. And for Saudi will be probably around 40 to 50%.
Got it. And how is the order inquiries right now from the export market and domestic?
Very good. The domestic market is still comparatively very strong on water, slightly weaker on oil and gas, but export market overall is quite bullish.
Got it, sir. Thank you. That's all from my side.
Thank you. The next question is from the line of Kalpesh Goti from Valentis Advisors Private Limited. Please go ahead.
Yeah, hello sir. Good evening. My question is to ERW projects. What kind of revenue we targeting for next year, and what kind of utilization we are targeting?
So we are targeting around volume of around 4 lakh tons, and approximately utilization would be around 50 to 60%. But the utilization is quite subjective, depends on the size of order, the thickness and everything. Sometimes you get an order which is ongoing and a good size, and your utilization percentage suddenly jumps up to 70-75% also of that mill.
Right.
That's the approximate guidance which I can give you.
Yeah. In your previous question to answer, you said margin expected to be remain flat in 25 and in 26 13%, and you said for over the period of 3 years, I missed the margin you were expecting.
Yeah. So like I said, that the margin from the operations of the stainless steel and the Saudi would obviously drive up the EBITDA portion in the 25-26. And looking at the next 3-year horizon, we would looking at an EBITDA of between 14 to 15% comfortably for the group.
Right. So my last question is related to the company we got demerged, Man Infra Projects. In 2019 we recorded, but the shares yet not be given to the shareholder. What the status there?
So basically, whatever Man Industry had to do, we have done, and we have done the needful and giving it to the court. But per se, everything is pending from the other side, and so I can't comment more than that. I don't know when it will happen, but whatever we had to do as a company, it's already been done.
So it's stuck in the court, right?
Yeah, it's still in court, and we don't know. I can't give an answer to that when it will happen.
So is it better, just cancel the record date because, because of record date, the entry is there, but the share has not been delivered. At least we can do that, right? I guess.
No, complete the obligation. No, that's what I said. That there was an obligation of our company, Man Industries, which has already been completed and filed in court. The other side is not doing needful and it's not moving, so we can't do anything. So I really cannot comment any further. It is in court, and I don't know when it will happen.
Okay. Thank you.
Thank you. A reminder to all participants, you may press star and one to ask questions. The next question is from the line of Pradeep Rawat from Yogya Capital. Please go ahead.
Yeah, good evening, everyone, and thank you for the opportunity. So my first question is related to our CapEx. Sir, all the CapEx that we have completed till now, ERW pipe and stainless seamless pipe and that steel bend and connector CapEx. So what are the asset turns that we can expect from these CapExes separately?
So basically, ERW can generate a top line of approximately 700 to 800 crores. And Benz is give or take approximately 100 to 150 crores. With a good bottom line, Benz would give approximately a 20+% bottom line. And SS we could achieve if it's a 70-80% utilization of SS would be around 800 to again 1000 crores of top line and a comfortable EBITDA between 18 to 20%.
Okay. And with respect to stainless seamless pipes, so as we can see in the industry that there are some distressed companies that are turning around right now and their utilization is ramping up. So do you foresee any kind of supply glut in the foreseeable future?
If the companies which are shut are continuing and giving and there is more demand, then I don't think there will be a glut. And also our competitors of what the kind of mill we are putting, it is only mainly Ratnamani, and that's what we are aiming at. So I think I don't currently, whatever the market research, what we see and what it shows and the growth pattern, we don't see any issues in any glut or excessive material in that particular market.
Okay, thank you, and all the best for your future quarters.
Thank you.
Thank you. The next question is from the line of Saket Kapoor from Kapoor and Company. Please go ahead.
Yeah, namaskar sir, and thank you for the opportunity. So when we look at your year-end numbers and we see there is an increase in the change in inventory at a consolidated level to the tune of 128 crores. So if you, yeah.
Good afternoon, this side Sanjay Agrawal. The inventory we need to carry basically because of the project-based orders we need to execute. Then sometimes in order to execute the orders, we need to procure the inventory well in advance so that the delivery can be done well as per the scheduled time. So that's the reason in the month of March, we have certain additional inventory that is going to be executed in the current quarter as well as in the coming days.
Sir, in the earlier reply also you mentioned about the current capex at 140 crore and going ahead 800 crore capex. So can you just confirm the figure and what kind of capacity augmentation are we looking from a capex of 800 crore?
Yeah, sorry, 140 crores was the capex done by the company itself. मतलब जो company का contribution जो करीब 350-400 करोड़ का जो company का contribution है, उसमें से company ने 170 और 140 already कर दिया है. The total capex outlay is around 900 to 1000 crores, in which the company's contribution is 30%, 30 to 33%, and the rest is already with the financial closures done, and the LCs of major equipments and everything is already opened.
So when you say company's contribution, could you elaborate what are you trying to explain? Means equity contribution and the remaining is the debt?
Or the equity debt contribution by the company, and the rest is through the financial this.
Okay. And what kind of capacity augmentation will it happen when this goes through?
So our Saudi would be approximately 400,000 tons, and the Jammu would be approximately 25,000 tons of stainless steel extrusion pipes.
Saudi will be 400,000, and current capacity is, sir?
Current capacity in India?
For Saudi, where you are contemplating increase?
No. So this is our first plant over there. The current capacity of Greenfield, right? 400,000 tons.
We do not have any existing unit in Saudi.
Right, sir. Okay. So current capacity of 350 is in India, and we are setting up a new capacity for 400 at Saudi.
Yes, we are setting up a new capacity of 400,000. The India capacity is larger than that. India capacity is approximately 600,000 plus.
Okay. And sir, if you take the entire basket today, can you provide the mix between the larger dia pipes and the seamless, and also the ERW?
ERW is just started and the API is just come in February, so now it will be picking up. So it could be revenue approximately contributing to between 15 to 20% of the revenue, and the rest of the revenue is majorly coming from your LSAW and spiral both.
Correct, sir. And on the other income part, sir, if you could explain what led to the increase in other income and other expenses also. Q on Q, there is a reduction of 20 crore, whereas
the other expenses is basically the logistic cost for the exports, which has gone up. So that is why the other cost is gone up. And when you're related to the first question was related to the income is principally related to your forex gain. So whenever we do exports, there is sometimes we get a forex gain. So this year has been quite good, and we've got a forex gain. That's why it is reflecting. But it is generated through this business only. It's a part of the revenue.
Okay. So they are unhedged gains. It may fluctuate on both sides.
No, hedged only, but natural hedging because you're importing and exporting. But sometimes you get the advantage of the dollar and everything whenever you get the business. So you get the benefit of that. So this year has been quite good because there has been a stability and all.
Right. And there are certain as well in the form of with the bankers as well as with the marketers.
Okay. And last question is on the debt number, sir. What is our current? I think the current long-term borrowing is at around 140 crore.
Correct.
And where it will peak? What would be the number for this year?
The long-term borrowing this year?
Yes.
So that would approximately increase
for the company, this will remain the
long-term borrowing.
Long-term
for CapEx. So it will be approximately going up. This year it won't affect that much because the COD of the projects is coming from next year. So it will increase from next year onwards.
But again, yes.
In the subsidiary.
Yes, currently.
Yes, sir. I'm talking about the consolidated numbers only. Yes. So consolidated numbers, we find the long-term borrowing at 136 crore.
Correct.
That will be at the consolidated level, there will be 400 crore sanctioned by the banks, which be the partly is already committed by the bank, and then the new project over there where the around 350 crore. So out of 1,000 crore expansion program, the company is putting around 400 crore. 600 will be the total burden, like the mix and match. That's what project charge.
So can you come again closer to the mic? The closing numbers breakup.
Sorry?
Can you repeat your statement once again, closer to the mic?
Rate of 136 this year, as even consolidated, will not go up because 25-26 is the dates for COD. Till that, all the cost which is capex out is capitalized, so your debt levels don't go up as such, maybe 10, 15, 20 crores. Next year onwards, the consolidated statement the debt will go up.
Debt number will go up, finance cost will not.
Finance cost is not going up. Finance cost नहीं हो रहा है.
Debt number तो
long term debt की बात कर रहे हैं.
Right, sir. Okay.
Why don't you also put an email to us, and if you want, we will
do that. Yeah, I'll do that. Thank you, sir.
whatever is in your hand.
Thank you. The next question is from the line of Ankur Agarwal from RC Wealth Solution Private Limited. Please go ahead.
ये जो आपका एक्सपेंशन है 900 करोड़ का जो आई थिंक फाइनेंशियल ईयर 24-25 और 25-26 में कंप्लीट हो जाएगा आपके हिसाब से, उसके बाद फाइनेंशियल ईयर 26-27 में क्या वॉल्यूम आप एक्सपेक्ट कर रहे हैं टॉप लाइन 700,000 करोड़ और 8,000 करोड़ समथिंग लाइक दैट?
So by 25, 26 and 26 or 27, so 25, 26 we will be around 5,000 plus crores.
And 26, 27?
And 27 will be between 6 to 6,500 crores.
6 and 6.5. And the margin about 15%.
Margin 3 years down the line would be that. It would gradually increase from 10 to 12 to 14 and then so on.
Okay. Any plan to increase promoter holding in the company? मैंने एक इंटरव्यू में देखा था कि आप लोग कुछ होल्डिंग बढ़ाने को हैं प्रमोट.
ऑलवेज करते हैं, अभी ये साल भी करेंगे.
अच्छा, ये साल भी करेंगे. ओके, थैंक यू सर.
ओके, थैंक यू.
Thank you. The next question is from the line of Pradeep Rawat from Yogya Capital. Please go ahead.
Yeah, thank you for the opportunity again. So, sir, my question was regarding our current capacity on all the pipes, LSAW and others, and what would be the capacity after the capex that we have announced, 1,000 crore kind of capex. So, can you please tell that?
So current capacity is between around 700,000 tons and including ERW. So 600,000 is approximately LSAW and 125,000 is for ERW. And with Saudi, we'll be at approximately 1 million plus tons, 1.1.
Okay, and what is the current utilization?
Sorry?
What is the current utilization rate?
The utilization is between 45 to 50% existing currently.
Okay, thank you.
Thank you. The next question is from the line of Akhilesh B, an individual investor. Please go ahead.
Hi, good evening. Thank you for taking my question. Sir, I'm trying to understand why our capacity utilization is not moving up. And as you mentioned, it's a very bullish time for the sector, and also export inquiries, etc., are very good. So why are we not able to, increase the capacity utilization at such a time?
I will reply. In this industry, the capacity utilization depend on the nature of the product and product mix basis. The product mix basis, if you see our catalog is showing 1 million ton capacity. The product mix does not come as per the wish of industries. So sometimes you get the low thickness of the business, sometimes very higher wall thickness of the business, which changes very fast. This time we will trying to put around 500,000 ton, subject to what market conditions and what kind of order flow will be there. Depend on design, etc., velocity, design, pressure, everything. So this industry is actually the rated capacity is separate and the practical capacity is here. Sometimes we are very busy. Suppose this time we are very busy. So then our capacity is almost 100% utilized. And if we get the very higher wall thickness pipe business, higher wall dia and this thing, then there will be a different combination, different chemistry. So try to understand the problem of the industry. This is everywhere the same problem, not with our company. So we are reasonably booked, reasonably very busy, and some pockets always available with the industries where we can utilize much more. So that's why we are not increasing any capacity in India. Whatever we are increasing the capacity out of country, in Saudi we are putting up the new plant, which will be the separate. This capacity does not mean and is not related to any Saudi capacity. Both are different. As regard to our Jammu plant, which is a SS, which is a different products and the different kind of value addition, etc. Over there, our capacity will be 25,000 metric ton as a seamless pipe. Apart from seamless, some welded and other pipes will be the separately, which is being worked out. But both the projects progress very well, etc. So this is excess capacity does not arise question here, sir. I hope I try to clarify the position.
Yes, sir, I appreciate the answer. Some follow-up on this. So are you saying this year, FY'25, we are targeting 500,000 tons of volume?
Our target, yes, sir, you are right. Our business budget and target is 500,000 tons and likely to achieve it considering the order flow and our bid position worldwide and as well as to new contribution from our ERW, we are likely to achieve it, sir.
Okay. And sir, one more question is on the order book. Usually, our order book is, completely executable within 6 months. Basically, we have 6-month visibility of orders at any time of production. So, but our bigger peers, they seem to have a longer duration order book. So, do you think after you commission the Saudi capacity, some change will happen in the, structure of order book also? We will have order book for 1 year and longer, or it will, continue like this?
Sir, in our business, normally we always hedge steel and other raw materials also. We do not take any risk of the big shipping charges or steel, etc. because we are mostly export 70-80%. So our visibility of the business between 6 to 9 months. So we always try to get the business to 6 to 9 months. Then there are other bidding and tender also. Accordingly, we decide what tender we should take, where we should be more serious to get the business. Considering market conditions, no risk taking about suppose the contractor can book for the book 2-3 years, the road construction, etc. But because of the steel level raw material and shipping, you cannot book more than 1 year or more than 8 months. So whatever this condition, controlling and keeping in the mind, we book our business to safeguard our shareholders and company.
So it would be similar even after the Saudi plant comes online?
Saudi plant also the same formula because we have to book the raw material also back to back. I think you understand this thing.
Right. And sir, one last question. You mentioned, Mr. Nikhil mentioned that this Merino shelter chapter may come to conclusion in this quarter. So, any ballpark idea how much cash it will give to the company on a net basis?
Yeah, I think this Nikhil already announced, and our documentation is going on over there. In this moment, to disclose the figure is not the right thing. First, we have to disclose the Bombay Stock Exchange, where as per the legal requirement. But very soon, the documents will be completed and then you will get this news. For this, I can say this moment only, it's a very comfortable position.
Okay. We hope it will be done before the next call.
Yes, sure. Before we meet next time, I think will be done before.
Okay. Thank you very much.
Thank you, sir. Thank you.
Thank you. A reminder to all participants, you may press star and 1 to ask a question. A reminder to all participants, you may press star and 1 to ask a question. Ladies and gentlemen, As there are no further questions from the participants, I now hand the conference over to the management for closing comments. Over to you, sir.
So we thank you everyone for participating in our Q4 2024.
Thank you. On behalf of Emkay Global Financial Services, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.